Ladies and gentlemen, welcome back to Data Dispatch. Hope you guys are having a wonderful day. We're going to be talking about Palantir Technologies and its possible path to $100 per share with a grain of salt that we need to, of course, acknowledge. Now, Palantir has recently hit these all-time high areas at the $40. And what we saw today was a little bit of a pullback, which was a potential that we talked about in yesterday's video. And a little bit of profit taking at all-time highs, especially with a lot of uncertainty that does arise around those price targets, that is not completely out of the ordinary and sometimes can be healthy for Palantir. One thing that I do really like about this stock is that we've seen a lot of support that has been created in the mid and the lower 30s. We're going to be talking about everything you need to know, especially what's happening with the market today. A big drop actually in the broader market as a lot of the Magnificent Seven stocks took a dive. However, Nvidia still continued to climb due to the AI demand. If you are a new or returning viewer, hit that like button, subscribe for daily videos, and of course, not a financial advisor, collecting all that data and dispatching it to you. Now, pop it up here, talking about Palantir, like we just mentioned, hitting that $40 resistance at that all-time high zone. And we see a little bit of some pulling back here, some selling pressure. That is not out of the ordinary in my eyes, not something I'm getting too concerned about at this time. Closing at 38.89, down about 2.8% of the day, following along with the broader market that came down about 1%, looking at the big three indicators of the market. Not a bad story. Now, talking about PLTR, an interesting article here on Seeking Alpha about its path to $100. And what this really does come with is a good comparison to Nvidia and how Nvidia looked before it had its revolutionary boom. Now, Palantir right now at a $100 price target, that is still showing signs of more than doubling, really reflecting on unappreciated potential and substantial market opportunity. Now, looking at the rally that we have seen, it's hard to think about Palantir at $100 per share. That's especially because we've been up over 150% in the last year and almost double since we saw the dip in August. So with Palantir and what we've seen in terms of momentum with commercial revenue growth, margin improvement, and for the mass adoption, the potential for the mass adoption of AIP, what we're already seeing, we're seeing the multiple partnerships that's kind of reinforcing this idea. And we've seen this across the board. Now, one of the big things, of course, that we should talk about is the valuation, and it's very stretched. This is the biggest criticism and the grain of salt that we need to talk about. Talking about, does Palantir have upside potential here in the short term? Because the biggest question is its valuation justified? However, with Palantir being overvalued as we speak, that is not a single metric that I think can be 100% criticized. Of course, yes, we do see that Palantir technicals seem even stretched on every type of metric that we've analyzed, all the different ways to look at valuation. It looks overvalued. However, looking at the actual unappreciated potential is quite similar to what this article mentions to the 2020 Nvidia, and relies on three key insights. And one of the big things is this unique technology, and this is AIP. And specifically, Palantir has really proved that it does have a unique technology in this whole field of AI demand. And this comes here from an earnings call talking about really, they're the only company to figure out how to help customers get beyond just chat with AI, leveraging the investments that have made in ontology, really harnessing this platform for implementation to bring into structured actions and drive actual economic output and value. And what I mean by there is Palantir has always strived to bring utility with its AI products, and more specifically AIP, into the market. And another thing is the market opportunity, because people are underestimating just how big, number one, the AI market is going to be, and the enterprise software market, which is expected to reach over $500 billion by 2023. And the question is, with Palantir being a leading competitor in the industry, how much of that market share can Palantir capture in the next 5 years? That even just a sliver of that, just a few percent, could lead to huge increases for revenues, which is leading into the last option or the insight here is the potential for margin expansion. Now, Palantir does rely on heavily sales agents, and a large investment necessary is, basically needed to produce and expand and expose their AIP software to bring in at high margins. Now, this is especially true as AIP becomes more of a commonplace. However, if we look at Palantir right here and currently estimates revenue of 2030, having about 8.3 billion, if we saw the enterprise software market and a Palantir only captured 2.5%, and this different cash flow analysis right here, you can see that Palantir can grow revenues to around 11.5 billion in the next 5 years. And that operating margin could increase to about 60%. And this article pinpoints, so this is kind of a similar path of what NVIDIA experienced with more actual moderate growth rates. So looking at the final thoughts here, Palantir could still more than easily double, so this article is saying here, and would still be more of a modest rally than what NVIDIA did, maintaining a buy rating. It's interesting, especially because a lot of people did not expect NVIDIA to launch as high as it did. And NVIDIA is up over nearly 2,000% in the last 5 years. So depending on how the market's going to operate and with the opportunity here, I think Palantir could eventually reach that NVIDIA moment. Of course, in the beginning of this video, we talked about with that grain of salt, and what is that grain of salt? I think that is going to be on time. Now, in the short term here, a lot of people are going to start to question, especially as we see a correction, is there upside potential left? And a lot of people are starting to downgrade Palantir from a strong buy to a buy just due to the fact of the justification of the high valuation. In that we thought Palantir at even a $50 billion market cap was high at $24 per share. And that Palantir, in order to justify this type of evaluation, is a share price in 4.5 years of $48 to $72. But however, if you're paying $40 per share today, some people are arguing that the return in 4.5 years would only be 20 to 80% if this is the case of the 25 to 30% growth rate. And even though AI demand is booming, what we see with the overall verdict is that Palantir, if their commercial business continues to perform strongly, then Palantir could still really generate those outsized returns. However, from where Palantir is right now in terms of an entry point, I do see the concern with its valuation. Looking at all the people that have gotten in at much cheaper prices, even at single digits, they are the ones in the background celebrating these higher highs. However, the risk for entry, and just if I were to take additional position, just seems a little bit too risky in my own personal opinion at these prices. And that especially correlates right here with some of the oil prices and treasury yields that are continuing to rise. We're also seeing a lot of the Magnificent Seven stocks. Apple dropped after following a downgrade from Jefferies, which actually basically prevented, or I want to say, cited those overly optimistic expectations for sales on the new iPhone. I think people are starting to finally catch on a little bit. Sorry, I am anti-Apple, as you can see on Pro Android. But people are finally maybe starting to catch on that, hey, all these new yearly releases of the iPhone, you're not actually getting a ton of new key features, and the prices just keep increasing. And a lot of people, I think, are starting to see that happening and actually getting more smarter about when they are upgrading their phones. You're also seeing Amazon falling 3.1% after Wells Fargo cut its rating on the stock, and Microsoft here and Google also lost ground. However, a bullish thing for PLTR is NVIDIA gained 2.2% amid the ongoing investor optimism around AI demand. So we do have a strong market data, and we're seeing the actual report that is starting to make participants and investors now believe that it's likely that the Fed will make 2/4 percentage point cuts in the benchmark before the end of the year. So 225 basis point cuts. What we are seeing, though, is actually the rise on the yield on the 10-year treasuries, which is, sensitive to those expectations around interest rates, moving above 4% on Monday for the first time in 2 months. So with that strong market data, we're seeing a little bit of a rebound there. Now, in terms of also what we are seeing with NVIDIA is price targets that are still continuing to become higher. We've seen targets up in the 180s and in the 200s. So the fact that NVIDIA has made this much of a rally, what makes it different from Palantir just on a much lower scale? That's a big question I have for you guys. Do you think Palantir is at NVIDIA 2020 times, or do you think it's a completely different stock and we can't compare apples to apples? I want to know what you guys think down in the comments. It's a really interesting story that could possibly come to fruition in the next 5 years. Peace out, take care, and I'll catch you guys later.